Welcome to the Coffee Shop, everybody. This is your host and barista, and I'm coming at you with an indicator that I will be releasing later today. It's called the VAVROOM. Okay, you can laugh at that name if you want, but I like it. It's an indicator that I created that really just kind of analyzes volume and volatility, and this is going to really help you guys mark out your charts for you breakout traders. And it's not enough to know like where your ranging area is. You want to know that you broke out of that range, and you also want to know about price manipulation, right? That's like a really key thing. To create a consolidation area, price has to like come down or move up from a base, from a drop or a rally, right? And it starts bouncing around in this area. And that's where it's called a consolidation area. Price gets trapped in a non-directional zone on the market, right? Between some very narrow price range, price levels. And you can see sometimes that a wick will end up outside the top of the range or outside the bottom of the range. You're like, that's a high, that's a low. You're going to break that. No, not necessarily. A lot of people will be able to mark ranging markets on their charts, which is fine. Good for you if you can do it. But when your candle starts exceeding the top or the bottom of the range and it hasn't closed yet, that's where people also get trapped. You're like, oh yeah, I'm going to take this long, I'm going to take this short. And I'm going to be honest with you. There is no such definitive rule that says when you enter a consolidating area, you have to look for breaks in the original direction of the trend. Okay, so let's take a look at the chart, right? Let's pretend price was in a downtrend, right? And it enters into this area where it starts just kind of dancing around, just really making no kind of sense, doing all kinds of things like this, right? You've seen this before, right? And eventually it just does that. It makes its way down, right? But there are times where, so this was the main direction of the trend, but that's not always what happens, right? You'll end up sometimes having this thing where price actually ranges, and then it just kind of goes out the top side of the range. I see that I drew this off the end. No big deal. We'll just kind of do that there. Did I fix it for you? Is your OCD okay now? Good. So anyway, another thing that we see in these ranges, right, is we'll see primarily price will come down, and usually early on, it'll make a wick out the bottom. If it's coming down, it'll make a wick out the bottom. Somewhere along the way, it makes another wick out the top, maybe another wick out the top, right? And you have no idea what's happening. And this happens because a candle forms, right? A candle forms inside this range. Let's color this like a green candle because, you know, it's a green candle. We'll do this, right? And let's, yeah, I guess so. That's good, right? We'll make it a green candle. Bloop, there we are. All right, so you get a candle, right? And it forms in this range. And it's moving up and it's moving up. And then all of a sudden, people are like, oh, great, I broke this high. And they start trading long. And they look for some other place to exit their trade. But then all of a sudden, the price immediately starts pulling down, right? And it goes against them. And it does this, okay? Then it turns into a red candle. We'll do this, right? Turns to a red candle. Okay, so now your candle's down here. It did all that, okay? Oops, sorry. It did all this. And I don't know, maybe it gave you a nice red wick sticking out the top, right? You've seen this before. I'll do this, red, there we go. Okay, and then you end up with this. I know that the wick is in the wrong place. Put your OCD aside. I'll get there. Okay, there you go. You happy now? All right, so anyway, so you get this wick, right, sticking out the top, and you get another one too. That happens again over here, right? That happens again over here. You get the same thing happen. And this is a consolidation area. Oop, I can't grab this now, can I? There we go. Okay. So, and what you get these two bearish candles because see the close is all the way down here, and this close, the close is down here. So, what you end up getting is like traders are trapped here. They traded long, right? Their stop loss is below this low, okay? They got in at the break. Their stop loss is down here, right? And they're looking for some swing up here, and they're like, yeah, I'm going to get out up there, but the price pulls down, triggers their stop loss, and continues dancing around. So this is what consolidation areas are. Consolidation areas are when the price action has done a tremendous move in either direction. This is a move down, right? And price action now needs more liquidity. So that's what this area is. It's creating liquidity. So for the opposing trade, people would see this range take place. It breaks out here, right? They're going to wait to get in past this low, right? They're going to wait to get in here, but they sometimes see a break out the range, like they'll see this, a break out the range, right? And they'll say, oh, okay, good enough. I'm going to get in. I'm going to go down to some level down here. Here's my swing high somewhere up here, consolidation zone, whatever. A mini zone in here. I'm going to do this and go for a 1-to-1. But then, of course, the price pulls all the way back and it goes all the way up here. So consolidation zones have no direction, okay? I do not believe the online theory that I've been seeing where you're supposed to trade it in the direction of the main trend. Not so, not so. What you need to know is, when are you in consolidation? Is price being manipulated? And when do you break the range, right? So the actual range of consolidation for me in my method is you find the consolidation zone, you wait for consolidation to be over, and you mark out the highest point and the lowest point of the range. Only then do you trade above or below the range. So you got to find the highest point and the lowest point. And then look left in your market somewhere over here, right? Above the range and below the range. Look way to the left, okay? And you're going to see another swing point in price. That's the swing that you want to take for your trade, okay? So long description, and now you see the visuals. There you go. And here we go. Right. So here's a perfect example of how people misinterpret like trading a range, right? So there's a nice little expansion manipulation takes place. Let me see if I have something here. Yes. Okay. So we see that we're in a downtrend, high, low, right? And then you got a higher high. It breaks this one. Okay. But this is not, you don't want to be taking this because you need two higher highs and higher lows, right? So anyway, so you have this manipulation in price. Manipulation provides a perfect retest. Okay. So there is manipulation taking place in price action right here. You just can't see it because you're looking at your highs and lows, right? You got this right here. You got a high, one there, okay? And you've got this high over here. You're marking them. Good for you. Good for marking them. I like that, okay? Mark your lows. You got your low over here, okay? But which one of these lows is correct and which one is manipulated? How do you know you're supposed to be trading, through either one of them? What some people often do by mistake is they see a higher low and a break of a previous swing high, and they start trading that long. Like, for example, here, right? They close above the moving average, and they're like, oh, there's a swing high right here. It was coming down, made a swing high. They closed above that and above the moving average, and they start targeting this, and price just doesn't get there. And again, it happens here. They break the swing high. See, you have a swing high with a higher low. There's probably a divergence here, okay? Higher low. And you have a close, right? Or up here, you have a close above that swing, right? And people start targeting this because it's above the moving average, and it's no good. You can't do that. You're still in a downtrend. So you need something to tell you that there is a range. You are either inside that range, or is a range you're outside that range, or you are looking at a manipulated swing high or a manipulated swing low, okay? So let's just kind of take a look at what this looks like here. I'll turn this indicator on, and we can go to town on it now, right? Put this over here. I don't want to delete anything that I need right there. We'll just turn it on. Again, it's called the VAVROOM. I have it currently set to look at a 14-period look back. So that is the same as this 14-period volume-weighted moving average. It has a built-in volume-weighted moving average. I have it colored yellow. And you're going to see real quick that these background colors show up, right? Gray and blue. Now, this is a swing low, but it is a manipulated swing low. It's not a true swing low, okay? Manipulated price action is colored in blue, and you can change it to whatever color you want. And the range, okay, it says low VAVROOM. Low means no volatility and no volume. It's not there. There's nothing there, okay? So that's when volatility and volume drop off the map, and you need it to crank up again. Now, when volatility drops, like with the ATR, that usually drops just before expansion. You want to catch the move on the expansion. How do you know where that is? Well, a low area, a place with no VAVROOM, is an area where there is no interest in price. So you want to be trading outside of that area. And it's very, very simple to do, right? So I did this in a way that you can follow just one specific method, okay? When you get this background, if it only happens on the one candle, like wait for the background to disappear, mark out the high and low of that candle, okay? Let's change this back to something neutral, shall we? I'm gonna go here, here, there. Let's make the background a little bit lower, right there. Okay, good. Now, so I'm just marking out the high and low of this candle, okay? And you see what happens, right? There's a couple things that you can look for. You can look for the high and low. You end up breaking through the low of the range with no manipulation, right? Manipulation happens later on. There's no manipulation and you are no longer ranging. So here's your breakout, okay? You broke through that swing low, right? And you can start trading shorts again, okay? You get into there. But as you're trading short and price is carrying on, you can see that this candle closes with a blue background. It's telling you, hey, price is being manipulated. And hey, again, price is being manipulated. Get out of your trade. That's what it's telling you. It's giving you a warning that this low is going to really pull against you. And sure enough, what does it do? Pulls back really hard, probably hits stop losses. But, you know, look what happens. Comes way up here, right? Let me just leave this here. And so I'm leaving this area marked out. I like leaving these marked out from the high to the low because it has a premium, discount, and an equilibrium level, okay? And usually what you end up happening is when price gets manipulated, it's pulling back to the equilibrium of your range, which is what you want price to do. This pulls back, right? And if I drew this out as a like support and resistance level, you would see that this is a perfect retest, okay? It's a perfect retest, which is really what you want price to do. So you have price coming down, right? Doing all of this, consolidates, comes down here, right? This is the swing that pushes price down really hard, right? And then it pulls right back into that same retest level and makes a huge move down. So this really sets you up for the big move, right? So the consolidation takes place here where there is low volatility and low volume. Then it starts gaining volatility and gaining volume to the downside, pushes down, right? Gets manipulated, pulls back into retest, and now you once again, as you see, the background is nice and clean. You could trade these price action swings, okay? So you can use a smart money concepts indicator or look for pivots or whatever the case may be, whatever it is that you like to do, right? But this is automatically showing you that even though you closed above your moving average, you do not trade this to the long side because you are right back inside that previous range, okay? So that's that one. And then you have this again, right? You get another range right here. Just going to draw this out. It only happens on one candle. So you go from the high to the low, okay? Show this range expansion setup. Okay, so it's a range expansion setup. What you have is you have this range takes place, and then you break out the bottom of the range. Look for the end of the range, the end of it, okay? And again, you're looking for a premium and discount setup, right? So this is where you start consolidating. It breaks out the bottom. You start trading short, and notice your moving average is below you. You don't have to wait for your moving to cross below your moving average. You can start scalping this on your way down. There's no manipulation on this swing, no manipulation on this swing. That means you could trade this breakout to here, take profit 1, trade it to here, take profit 2 if you like to. And then when price starts pulling back right here, so it makes a low and pulls back. Okay, great. Take your range. Now expand your range, okay? Because the market is fractal. This on a smaller time frame, this one candle is a trading range. Price went down, up, and then broke through either way. But on a larger time frame, price had a high and a low and then made another swing high, right? So you're simply going to take this level, bring it down to right there, okay? Right to that low, right? And what happens to price later on? It gives you another perfect setup with a manipulation. Price pulls back into the equilibrium, gives you manipulation, keeps going, right? You have another range take place right here. See, the high to the low. And where do you break out? Where's your breakout? Your breakout is right here. You break out. You no longer need this. Okay, I'm trying to get rid of this. Come on. You get rid of this. You got a new range. You break out the bottom of the range, and this manipulation ends up, this price action ends up happening to be an equilibrium, a perfect retest. You break out here, and once again, you trade back down to your short side. You re-enter your trades. So play this video back a number of times. I'm going to be putting this indicator on TradingView. It will be on my website. Go over there. Wait, am I pointing the right way? Hang on. Go over there to Coffee Shop Crypto, okay? I've already put a bunch of info about this indicator in the website, inside of coffeeshopcrypto.net. Go there, join the website. There's a lot of stuff going on. I will be releasing some of these simple indicators directly to you guys. You'll be able to get it there first, take the code, put it on your chart, and then you'll find it on TradingView later on, okay? So that being said, I think there was another quick little setup. Yeah, so right here, here's another little detail. This one's a little bit more advanced, right? What you have here is a false breakout and so on. So if I turn this off, this just looks like price immediately wants to go long again, because look what we have here, right? We have a nice rally, and then it drops to a low, makes a high, and then a higher low, right? Starts moving up and it breaks this. So this is where people start getting trapped. Like I said, trapped traders end up in consolidation areas. You get a break of this high with a higher low, right? And this is where they're like, okay, I'm going to take this long trade right here after this break because I had a higher low. As long as I close above this, I'm going to get in. They go right in on the end of the candle, use the swing low that they just had, right? But price immediately pulls against them. And there is no divergence here. I've already checked with an RSI. There is no divergence. So that being said, this would be a bad trade. So how do you avoid this? Okay, let's take this off, right? And so this is a perfect setup for like how traders are really looking at these stupid price action patterns too, right? The head and shoulders thing. Don't do that. Don't do any of that stuff. So anyway, let's put the VAVROOM on, right? The VAVROOM is showing you that you have a range that you just traded back into, right? So you have several candles in this range. And what I do when there's several candles, not just one candle, several candles, you can do two things if you want to be a very reactive trader. You could find the first close, okay, and the last close, right? And you can trade breaks of that. But I prefer to take the highest point and the lowest point of the consolidation area. So that's going to be here, the highest point, right? And where's the lowest point? It's going to be right here, right? I'm just picking that lowest point right there. This is going to be my trading range. So even though I made a higher low, right? Price pulls back with no manipulation. Price pulls back. It does not break the top of the range. It once again just barely breaks out the bottom of the range. Now, what did I say? Find your consolidation, find your swings outside the consolidation, and you trade after you pass that swing. So you have a swing right here. Okay, that's a swing low, which means you want to trade below. Once you cross below this level, after this break, you want to do your trade right below that. This candle breaks that. This is where you enter your short trade, and you take this right down a little bit further. I don't know how much further down it goes. Yeah, look, there you go. So it goes even further out, right? There's no manipulation or loss of volume and volatility at this point. So you're still looking for, what do you have here? You've got a high, lower high, right? You've got a low and a slightly lower low, right? You want to break those. Even if you check this high, it's a lower high. So you're still good. You're still good, right? So anyway, and again, this is the last zone that was on your chart. You're not there. But when you get this, take a look back here. What do you have? Here's a high. Here's a low. What do you have happening here? Okay. You don't want to be trading into a range. You want to break out the bottom of a range. So you broke out of a couple of them. And this is really cool, really simple tool to use. I will be advancing this a little bit further in the future. I'm going to try and turn it into a volume profile type thing, or you'll be able to have these PD arrays, these boxes, drawn out for you on your chart automatically. Okay, so that's another tool coming at you from the coffee shop. Sorry for the long video, but hey, there's a lot going on with this indicator. Even though it's very, very simple to use, do me a favor. It's very important. Read the write-up down below. There's a link to the full description of this indicator on the website, like down below. It goes to the website. You got to read the whole thing. Okay. It's really cool. Peace out from the coffee shop. See you next time.